On the COVID front, I want to bring on Josh Jamner, ClearBridge Investments and Strategy Analyst here with us. And Josh, I mean, when we're talking about maybe the reason why all of these jitters are hitting now, obviously a lot of focus here on the Delta variant, but what's your take on maybe how it's trickling through the market today and what you expect moving forward if those fears are going to be sustained?
Thanks for having me on, Zach and Akiko. Great to see you both again. Absolutely. I think that today's market move is being driven by this. It's been a known unknown for a while, as the previous guest, Dr. Akhter, was talking about. We've been talking about variants for 6-9 months longer, right? The risk of a variant that might lead to COVID spread worsening, the reintroduction of social distancing measures. Obviously, we've seen things like the reintroduction of a mask mandate in Los Angeles County. That's been something that's sort of been on investors' radar screens. It doesn't mean everyone's positioned for it. And I think that's what we're seeing today. Market seems to be getting a little bit spooked. You see it in the airline stocks and some of the travel stocks, cruise stocks like you talked about. But I think it's important to take a step back and remember we're 2-3% from all-time highs right now. Market isn't sitting here saying, oh, wow, it's completely clear that we're going back to sort of the March 2000 timeframe. I think if there was a greater worry about that, markets would be selling off much more. So as we look forward from here, I think the key question is going to be, what does the Delta variant look like? What sort of social distancing measures are going to need to be introduced? What does that do to the earnings potential for stocks? And obviously it impacts travel stocks much more than, let's just say, the technology sector, which is why NASDAQ's holding up better than the Dow or the S&P today. And then as over time, we can hopefully get some clarity that social distancing measures aren't going to have to be, we're not going to all have to spend another couple months staying, completely in our homes. I think the market will turn around and rally. It's a matter of when we get that clarity and how long it takes.
Yeah, Josh, that does beg the question about why today. I mean, if we have known about this Delta variant threat, we've seen the headlines, what was it today that triggered it? And I'm wondering if you think investors are just kind of looking for an excuse to reposition themselves. Obviously, we got plenty of headlines over the weekends, but how are you looking at your allocation in the context of what we're seeing today?
So I think that this move's been building, not just today. It's certainly coming to a little bit more of a precipice today than it has been over the last couple of weeks. But we've seen cyclical sectors have been, lagged kind of defensive sectors or growth stocks really throughout much of the second quarter. More recently, I think that potentially one of the catalysts could be you've started to see the case counts rise. We were having this conversation, let's say 2 weeks ago. Obviously, Delta variant was a known. We could have been talking about it, but the case counts were much lower. And it's just now that we're starting to see the case counts in the United States really start to pick up. I think, as Zach was saying, or I forget who it was, you, Akiko, or Zach, I'm sorry, there are some silver linings. So far, hospitalizations remain low. It seems like the vaccine seems to be really effective against this. I think that leads us to be optimistic that ultimately we won't have widespread reintroduction of lockdowns and tighter social distancing measures. And as a result, we're not making changes in our portfolios. We're not advocating to our clients that they should be making changes in our portfolios. I think that there's a pretty reasonable chance that we'll be looking at this if you take a longer term perspective, not just today, but when we think out to what does the next 3 months look like, 6 months into 2022 even. I still think there's a pretty attractive opportunity in some of these cyclical sectors that really, they've kind of gone on sale really over the last 3 months, a little bit more now. And the earnings potential for them is really just starting to come online. We're just in the beginning of earnings season. About 10, a little more than that, 10% of companies have reported so far, and results have been, tremendous. Companies are beating by over 20% in aggregate. I think just over 85% of companies that have reported so far are beating. I think that could be the kind of the real driver of equities moving forward if we can get this Delta variant sort of concerns, not to say back on the back burner, but wrap our heads around them and be a little bit more comfortable with what it might look like.
No, yeah, I think that's right. I think that's why, the hospitalizations, to me, the biggest question was always going to be how people would operate, because whether or not you focus in on cases. If you focus in on cases right now, things don't look good. If you focus in on hospitalizations and death, you get more people moving to the camp of if you're vaccinated, you can go back to living life. You get COVID, you're down for a few weeks, hopefully, in the best case scenario, and you get back out there. But, when we talk about the other drivers now and what people will be focusing in on, it's almost as a huge blessing to have earnings to focus in on rather than just kind of speculation here. And I wonder, too, how much maybe some of this could maybe alleviate the pressure on the Fed as well, given the fact that we've talked so much about inflation fears. If there is potential weights on, some of the things where we have seen prices rise the most, I'm looking at airfares. Obviously, if you have airlines down today, could be some expectation that maybe people might want to travel less. How does it all maybe play into the pressure on the Fed coming off perhaps a little bit here, given all the fear drivers that we had been talking about the weeks prior?
It's a great point, Zach. One of the big, there's a number of things driving inflation right now, but a big part of it has been we've had a very rapid shift in demand for a number of things. You cited airlines, rental cars, hotels, some of these sort of reopening activities that people are rushing to do, and it's just taking supply a little bit longer to catch up. And Economics 101 would tell you, okay, in that type of scenario, prices are going to go up. I think you're right. I think it does give the Fed, I hate to say an out because that's not the right word, but it's maybe validating or justifies their go slow approach that, we've had a couple of hot inflation prints, but now if Delta variant does mean that consumers are going to be a little bit more hesitant, I think that might be one of the things that the market is really latching onto, the potential for, even though there's something like 2.4, almost $2.5 trillion of excess savings that have built up by American consumers over the last little over a year, 15 months at this point. If individuals are going to be a little bit more cautious, if we're seeing headlines about the Delta variant, say, you know what, maybe I'll wait to take that trip, or maybe I'll wait to go on the vacation until things get a little bit more under control. That's going to slow down the pace of growth in the second half of 2021. That could lead to a little bit cooler inflation. And also, I think the Fed, if we're sitting here in 3 months and that's the case, I think we're going to be appreciative that the Fed didn't, rush to tighten as quickly as some might have been calling for a couple months ago. So sort of validating for them in a way.